Welcome to Beyond Just Money by 𝐂𝐚 Media, an independent global media house and investor relations group. Please note that this podcast is for information purposes only. It's not a solicitation or recommendation to buy, sell, or hold the stocks of any company or companies or engage in any investment activity under discussion. 𝐂𝐚 Media is neither licensed nor qualified to provide investment advice through this platform.
Welcome to Beyond Just Money with me, Samta. And today with us, we have the head of content of 𝐂𝐚 Media, Nidhi Sinha. Well, an year ago, crude oil prices were at historical lows. A little over a year ago, the prices of Brent crude oil were hovering near the zero level, while the West Texas International, that is WTI, was trading in the negative territory. If we look at it now, crude oil prices are at their highest level in over 2.5 years. So welcome to the show, Nidhi, and what are your views on the rising oil prices?
Thank you, Samta. Oil prices are indeed rising yet again. Both Brent and WTI are staring at the $80 a barrel mark for the first time since October 2018. Oil prices surged as sanctions were looming on crude oil exports from Iran amid the US-Iran standoff over the nuclear deal. During the current year, if you see, WTI crude oil prices have surged 58%, while Brent oil prices have soared 50%.
So what really determines the price of crude oil?
Well, crude oil prices hinge on a simple equation like any other marketplace of supply and demand. Any kind of economic growth requires a lot of fuel to run productive activities. Therefore, growth is one of the biggest factors affecting petroleum products and thereby crude oil demand. Growing economies, if you see, increase demand for energy in general and especially for transporting goods and materials from producers to consumers. In a recovery phase, two primary uses for the crude oil are energy for production and that for logistics.
But why are oil prices rising right now, Nidhi?
Right now, most of the economies across the globe are focusing on recovery from one of the worst recessions in recorded world history. Crude oil prices are therefore on the rise, stoked by the rising demand of the fuel. To complement it, the supply cuts from 2020 by major oil-producing nations have been extended. The Organization of Petroleum Exporting Countries, which is called the OPEC, and is a syndicate that controls an influential 40% of the global oil supply, extended supply cuts made in 2020 when crude oil prices had reached a historic low during the first 5 months of 2021. And countries struggle to maintain the balance of excess supply over paucity of demand due to the COVID-19 pandemic. Saudi Arabia, which is one of the major oil producers across the globe, made an additional voluntary production cut of 1 million barrels per day between February and April. Of this, only 250,000 barrels of production has been restored in May as of now.
But why do you think that the supply cuts are continuing?
So to give you an update, OPEC Plus, which is the conglomerate of OPEC countries and its allies, met over the weekend with an aim of restoring the production cuts. OPEC Plus as on date consists of OPEC countries along with Azerbaijan, Bahrain, Brunei, Kazakhstan, Malaysia, Mexico, Oman, Russia, South Sudan and Sudan. Even as the meeting ended in an impasse, there has been restoration of production cuts, albeit partially. Amid the pandemic last year, as global demand of crude oil started diminishing, OPEC Plus agreed to record output cuts of almost 10 million barrels per day. Till now, they have been gradually relaxed by 4.2 million barrels. So the production level is still 5.8 million barrels per day, below the pre-pandemic levels of 2019. The meeting earlier this week was called off after disagreements between two of the most influential members of the cartel, which is Saudi Arabia and United Arab Emirates.
So can we say that oil prices will reach $100 a barrel this year?
For the record, Samta, crude oil prices crossed $100 a barrel for the first time on 31st January 2011. It sustained that level over the next 3 years till September 2014, at times surging to as high as $130 a barrel. There were two major reasons at that point in time for the rising crude oil prices. First, like current days, back then the world was coming out of a recession. So the surge in fuel demand was leading to a surge in crude oil prices. Moreover, the world was witnessing the Arab Spring back then, along with the civil war in Libya, involving the key countries that contribute to the oil supply across the globe. There were also bottlenecks in transportation in the US Midwest. This time, however, the rising crude oil prices are just a factor of supply-demand mismatch, the difference over which can be ironed out through diplomatic avenues. So it is unlikely that crude oil prices will surpass $100 unless the US troop withdrawal from Afghanistan has volatile repercussions. There is also another factor that can add to the pressure on oil prices, the escalating tension between Israel and Iran. If there is any kind of conflict between the two Middle Eastern countries, crude oil prices may inch towards the $100 mark, even if it doesn't cross it.
So to wrap up today's podcast, Nidhi, what are the expectations for next year?
Well, according to several industry experts, Brent crude oil price may actually reach $100 per barrel next year on the back of recovery. The effective COVID-19 vaccinations program and OPEC Plus supply curbs would result in a spike in oil demand. Moreover, the tightening of oil supply and rising demand in 2022 could also take crude oil prices up. However, if you look at the Bank of America expectations, it says that the average Brent crude oil price will remain around $75 per barrel in 2022, while the earlier estimate was even lower at $60 per barrel. Further, the bank has also indicated that the US would respond in controlling higher prices by ramping up production, and Brent would be back to $65 per barrel by 2023. So really, let's see where the flow takes us.
Well, it certainly seems that oil is one commodity whose prices can have far-reaching effects. So we will be watching this space, and our listeners should also watch out this space to know about more developments in coming times. So thank you so much, Nidhi, for sharing this information with our listeners today.
Thank you, Samta. Always a pleasure to be on this show.
Well, to our listeners who want to listen to this podcast again, you may log on to our website, that is 𝐂𝐚𝐥𝐤media.com, or on our YouTube channel. Until we see you next with yet another insightful episode of Beyond Just Money, stay apprised and invest wise with 𝐂𝐚.
Our listeners are requested to make their own inquiries about any investments, and 𝐂𝐚 Media strongly suggest that the listeners seek advice from a financial advisor, stockbroker, or other professional as necessary. 𝐂𝐚 Media hereby disclaims any and all the liabilities to any listener arising from any use of the information shared or discussed in this podcast. This podcast is available for personal and non-commercial use only.